Hi everyone, this is Grant Abbott from I Love SMSF and Lightyear Docs speaking, and we're going through investment strategies the compliant way. This is my third, in fact it could be my fourth webinar on this, but each time that we go down the track, we find that things are starting to evolve. And more importantly, of course, up until the end of March and possibly a little bit later, this is right in the middle of compliance season. So we're getting a lot of queries from auditors, scarily enough, which is extremely scary, that some trustees who have received the notice from the tax office in relation to their LRBA, their property, their 90% plus property holding in terms of investment strategy, etc., have actually sold and unwound their LRBA. So what I would say to that is more fool them if they're not aware of the legislation. So what I want to do is go through and we'll have a look at a lot of issues, the legislation. We're going to have a look at the Lightyear Docs investment strategy document and a lot of questions that have come through. So it's really going to be hard, fast, and we'll go through all the relevant issues you need to know. Now, for me, I've been in this industry since right from the start in 1993, and by far and away, the investment strategy that's been built here is the most sophisticated and comprehensive document that really has ever been produced in Australia. Even if you sat down and spent 20 or 30 hours building one for the client, you're still not going to get the quality of the add-ons and the inputs that are basically sitting in there. Essentially, the key to it is the underpinning platform that we use, which allows automation so that we can add different documents in there, such as a commercial, you've got a commercial real estate research paper. For those of you who've seen before, we've got a residential real estate investment paper. These can be upgraded, updated, and inserted or pulled out whenever you want, and we're going to go through quite a bit of that at the time. And essentially, by putting that extra stuff, we're bulking it up, we're giving a really cogent, coherent strategy of why we were doing this. That enables us to go down the track and put in more than 90%. The Commissioner's letter doesn't say that you cannot have more than 90%. It's just saying how you're going to cope with diversification. So the more evidence we can put in there, then the greater it is. I've yet to see in all my experience of over the 600,000 funds, the Commissioner ever coming in and saying that that fund is non-compliant because it is not diversified. Remember, this is the first step. The investment strategy has to cover diversification, and if it does, then you meet the investment strategy rules. It is not incumbent, in fact, there is no laws within the SIS Act, which primarily is there to protect members as to how the trustee must invest. If we go back into the 70s and early 80s, in those days, it was a requirement that all superannuation funds had at least 30% of their superannuation investments by way of government bonds. 20% had to be in federal government bonds and 10% could be in state or municipal bonds. That's no longer the case. So here it's just a leeway into investment strategy. We'll go through that one. Now, you'll see in it, because with an investment strategy itself, it is actually it's a strategy to meet an objective. It's a plan and a process. So that if you're drafting up an investment strategy now, it's really for the 2019-2020 income year, which is not a bad thing, but as we're right in the middle of the reporting season, we've got a scenario that auditors, depending on the auditor, and there's 5,000 of them or thereabouts, depending on how they take it, but essentially for the 2018-2019 investment strategy, it should have been completed in the early quarter, in the first quarter of the 2018-2019 income year. Now, a lot of auditors are slipping up on that one, but that will get out, and probably not this year, but next year will certainly have an impact. What we've got, though, and I'll take you through a little bit later on, is that there's a deed of ratification and deed of rectification. Essentially what that does, it's a legal way of backdating so that the investment strategy you're doing now you're building through the Lightyear Docs platform. By ticking this, you're actually getting an additional, quite a heavy, hardcore legal document that can not only go back and put in place the investment strategy, and you'll have to bear that in mind in terms of your benchmarks, go back and put your investment strategy in for the 2018-2019 year. It has already done the 2019-2020 year. And if you want, if you haven't got a written investment strategy, you can take it back even further as a proof of record. So essentially what we need to do is we need to have a look at what we've done, where it needs to go. Importantly, if auditors are having an issue, it's absolutely crucial for them to be placed there. So if you're an auditor and you're actually listening to this, we're going to go through the legislation, we'll go through the Lightyear Docs, while we come about how it references. And Pete, please feel free to come to me, Grant, at ilovesmsf.com to discuss the specific issue. Anyway, let's just bounce out of here and I'll come back in very shortly. But I'd like to just take you to the legislation itself. Importantly, this is the SIS Act. So I'm looking at the SIS Act, section 52B, which talks about covenants. So covenant is simply a rule which is to be included in the governing rules of a self-managed super fund. So this is different to section 52, which deals with regulated super funds. So self-managed super funds are regulated, but we've got a situation here. So subsection 1 says, if the governing rules of self-managed super fund do not contain covenants to the effect of the covenants set out in this section, those governing rules are taken to contain covenants to that effect. So when we go down there and we have a look, the definition of governing rules can be found in section 10.1 of the SIS Act. And when we have a look at it, that was a good bit of timing, wasn't it? Governing rules in relation to a fund, scheme or trust means any rules contained in a trust instrument, other document or legislation or combination of them. Now, this is really important because obviously what we've got in section 52B is saying, look, if your trust deed or other documents don't have an investment strategy or investment strategy criteria, then 52B pulls in all of these other things, and we're going to go back and have a look at it. Now, when we do an investment strategy, we're not doing it as a part of the trust instrument. So our trustee may say that the trustee of the fund is required to do an investment strategy. And as a consequence of that, that becomes part of the governing rules. Now, when we do an investment strategy, that is another document. So that now becomes part of the governing rules of the fund. When we do a pension, that is another document which becomes part of the governing rules of the fund. When we pay out a commutation or make a commutation and we evidence that, that now becomes part of the governing rules of the fund. Anything that really, if we go down further, and we'll talk about unwritten rules, that looks at the establishment or operation of the fund, scheme or trust is part of the governing rules of the fund, which is absolutely crucial. So when I do an SMSF will or a binding death benefit nomination, you know how I feel about that. Essentially with those ones, that's part of the governing rules of the fund. For that, I'm just going to take us to 52B, which, as I said before, relates solely to SMSFs. So you can see there's registrable superannuities, which is not us. Now, when we get down to 52B, we've got a whole lot of covenants. So if for example, here, one of the covenants is the trustee must act honestly in all matters concerning the fund. So if the trustee doesn't say that the trustee must act honestly in all matters concerning the fund, it doesn't matter because this is now brought into account as part of the governing rules of the fund, which now means the trustee must abide by, as must advisors, etc. This is a good one here. To perform the trustee's duties and exercise the trustee's powers in the best interests of beneficiaries. So, for example, you've heard me before, if we've got mum and dad sitting inside the fund, mum's not really interested in being a director of a corporate trustee, so dad has the enduring power of attorney. He can act as a replacement director and really control the fund. But in essence, he still needs to look at, when he exercises the powers, to be in the best interest of all the beneficiaries. To keep money and other assets of the fund separate, now this is an interesting one, I'll just do this one here. To keep money and and other assets of the fund separate from any money and assets respectively held by the trustee personally. The Commissioner, as I understand, has found 14,000 funds that do not have their own separate bank account. As a consequence of that, expect, if that's part of any of your clients, you will receive another notification, another letter from the Commissioner saying that you do not have a separate bank account relating here to 52B2D, and again, need to take that into account to the auditor. And of course, they're going to go to the trustees and the auditor as well. So let's just jump down to F. So to formulate, review regularly, and give effect to an investment. In fact, what I might just do, I might highlight this because I like the highlighter. So to formulate, review regularly, and give effect, and this review regularly should be each year, give effect to an investment strategy as regards to the whole circumstance of the fund, including but not limited to the following: the risk involved in making, holding, and realising the likely return from the fund's investments. Let's go down there. Having regard to its objectives and its cash flow requirements. So the first thing is we need to show that there's an objective of the fund. So what is the objective of the fund? Now, it's not the investment objective, it's the objective of the fund, and it's also cash flow requirements. Secondly, the composition of the fund's investments as a whole, including the extent to which the investments are diverse or involve the fund in being exposed to risk from inadequate diversification. So the investment strategy, you have to have a composition of the fund's investments. So that means we need to go through our asset classes and say, look, these are the asset classes that we're actually investing in as a whole. And then if we are overweight in one specific area, look at the potential risks from inadequate diversification. And that's it. So auditors, there needs to be included inside the investment strategy per se. One is that if you are investing in property, why is it being done for that perspective? How does that investment relate to the objectives? And what are the risks from inadequate diversification? So, for example, if there's an investment paper saying that, look, if the trustees make a decision that the next 20 years, property or investment properties or commercial properties get a great cash flow issue, a cash flow return, then that is absolutely okay. But what are the risks in terms of property? Of course, it's unintended. 3, the liquidity of funds investments haven't gone to cash flow. So by its very nature, as we go down the track, particularly property, if it's being held there for pension purposes, and we're up around about 90 or 85, 90 years of age, we're having to pull out 7 or 8 or 9% as our PVF factor, and we're residential property of only 3%. Obviously, that liquidity is going to have a key issue. So it's great to have, for me, the key issue is not so much diversification, it's actually cash flow in terms of property. Is there enough to meet the requirements? Now, if everyone's in accumulation stage, there is no cash flow apart from auditing and accounting fees, then everything seems to be A-OK. The ability of the fund to discharge its existing and prospective liabilities. So generally there, if you're an LRBA, is how are you going to meet your borrowing? And there should be inserted inside the investment strategy itself a separate section that relates to borrowing. Same thing is with a pension. If there's pensions that are payable, how are we going to meet those from a cash flow point of view? All of these things are absolutely crucial. I haven't got, okay, so sorry, Michael, I saw your thing, so perfect. So Michael Samuel says, what if the member has capacity outside super to make contributions that keep cash flow positive in case the fund is running lean? That's a really good question, Michael. And from that perspective, it's absolutely crucial to understand that when we're doing an investment strategy, we cannot take into account the circumstances of the members outside. This is an investment strategy for the trustee, as is evidenced at the start of section 52B, which says the covenants are the following covenants by each trustee of the fund. Again, we'd rather have a corporate trustee than individual trustees, because if we make a mistake here, then the fine will be on individual trustees, whereas there's a one fine for a corporate trustee. What happens for members outside? Absolutely. So when we look at the cash flow side of things, it's can you pay your auditing fees? Can you pay your accounting fees? Can you pay your pensions, etc.? Now, you may be able to make them in specie or use promissory notes. Again, if you're using a documentation, you can see there's a deemed promissory note if a minimum pension payment is not made. So we need to take all of these things into account with investment strategy. But remember, this is a trustee issue, which is absolutely crucial. So let's move away from there, go back to the slides. I'll have a look at a few questions, then I'm going to take you through our investment strategy, and we'll build it on the foot. So some of the questions we've got, and please feel free, because what happens is once we get these questions, I then go back and we redraft, we add to the investment strategy as a whole. So if I took you back to where it was when we first started in April, it's certainly increased exponentially since then, which is absolutely crucial. None of our documentation actually relates to, hopefully, can you all hear me now? Is it a bit better if I speak up like that? I'll just give myself, I'll get a bit closer to the microphone, right in the midst of getting different microphones at the moment, so I apologise for that one. So if we have a look at this, these are some of the questions that we've got, that we've received from our members, and importantly from that, we will continue to update all of our documents as we see fit. So first off, what does it cost the investment strategy, and what if we have a lot of them to do? So the cost of the investment strategy, and it doesn't matter whether you're using a deed of rectification, ratification, everything's bundled into one, so there's no additional cost, you know exactly what you're getting. That's at $49. Now, for those of you who are LY strategists who are on our unlimited document platform, or a licensee such as Michael Samu, who's on here, then it's unlimited. So you can do as many of them as you want, and just simply they'll all be held in the vault, which is absolutely crucial. I know that we've had a couple of people from Now Infinity who have moved over to Lightyear Docs, and I can't believe it, Now Infinity didn't have a vault. All of our documents are stored in the vault for you for access later on, which is important. So again, we can either go unlimited or we can do on a doc-by-doc basis. What is the problem for advisors and auditors if we get things wrong? Again, what I'll do is I'll just jump back into the legislation. We'll just go down to, because we know about governing rules, I'll just go down a little ways here. Let me just go through here. So if I go to 54C, which talks about other covenants, a person must not contravene any other covenant contained or taken to be contained in the governing rules of a superannuation entity. So when we do an investment strategy, particularly if we are doing it personally, so there's two things. One is the trustee does it, or we do it, or we give it to the trustee and say, well, this is your investment strategy. From that perspective, you can see it's not an offence, so that's a good thing. It doesn't result in invalidity of the investment strategy, that still holds. But when we go down here, we can see recovering loss or damage. So subject to subsection 4A, a person who suffers loss or damage as a result of conduct of another person that was engaged in contravention of 54C may recover the amount of the loss or damage by action against the other person or against any person involved in the contravention. So, for example, if, and this is important for auditors, if we go through and we see an investment strategy that effectively has 0 to 100% cash, 0 to 100% this, the Commission has already said that is not an investment strategy. Hence, if there is no investment strategy, then it means quite clearly we are breaching our investment strategy requirements under 52B2F. That means that if we have an investment, say property or shares, and they go down, and as a consequence of that, we lose money on those shares, we can recover as against the auditor, against anyone for that matter who's involved in the production of that investment strategy. So for the accountants out there, what I would suggest is that we take the relevant benchmark requirements. I'm going to talk to you, I'll show you that in a little second. We take the benchmark requirements from the client. The client then you go through the investment strategy of the client then signs off. And as a consequence of that, it's the client's investment strategy. We're trying to ensure that we keep away from being pinged. One of the defences that's pretty important to this is a defence to an action for loss or damage suffered by a person as a result of making of an investment by or on behalf of a trustee of a superannuation if the defendant establishes the defendant has complied with all of the covenants referred to in sections 52 to 53 and prescribed under section 54 to apply to the defendant. So if we have a look at that, what that means is that provided that we comply with all our covenants, which includes the investment strategy, and so if our investment fits in with an investment strategy, then we're okay. That's why we go through our benchmarks. We have a little band of benchmarks. So our cash holding might be between 20 and 40% because we might be making contributions selling assets. Now, of course, if there's a large, if we're going into an LRBA and we've been running primarily cash, then we need to update our investment strategy. And you'll find that shortly will be part of our automation package under the LRBA. So if we go apart from that, let's go back to some of the questions that we have received. So what's the problem? Well, we want to make sure we get out of suit. The client has received a diversification letter from the ATO. How is this incorporating the objective, and how can we ensure the client takes responsibility of 90+% one asset? I'm going to show you what I've done. This is a recent addition only last night, so I haven't checked it. But essentially there, that if you have received a letter, I'm going to show you that's now incorporated into this investment strategy automation, where the trustee says that they have looked at diversification and they're quite happy about it. Again, I'd love to have your feedback on that. What is the date of the investment strategy? As I said, we are currently doing the 2019-2020 investment strategy, but we can use a deed of rectification ratification to take it back to 2018 and 2019 and even earlier dates if we've lost those investment strategies. What is an investment objective? Well, the investment objective, remember, if we go back to the legislation itself, it provides that we have to look at, we're getting there, sorry about this, best to go through the legislation, particularly as this may well be utilised by our auditors. So 52B basically says there, to formulate a review and give effect to investment strategy, the risk involved making, holding and realising the likely return of the fund's investments, having regard to its objectives. So what we're looking is not necessarily the fund's investment objectives, but the fund's objectives as a whole. What is the purpose? What is the mission of that particular fund? I'll come back and I'll explain all this when we go into the document. What happens if there's over 90% in equities or cash? Because if the Commission is pinging this at the moment for properties and LRBAs, what's going to be the case if we've got equities or cash? Just to bear in mind, most of this this will be available as a recording a little bit later on, so you can always go back to it. Do you have anything we can give our clients? And I'll have a look at that very shortly. What about related party investments? How do we cover those up to the 5% limit if it's, for example, a related party loan? And you can do that, for those of you who've been before, you can do the SMSF loan, which is a related party loan on our platform. Just got to be mindful of the 5% limit. Where do we put cryptocurrency? Again, investments in unrelated companies or trusts. So these are private companies or trusts. Loans to unrelated entities, where would that be? Derivatives trading, investments in cryptocurrency, single asset class concentration. What are we going to do for there, which I looked at before? Where we have derivatives, a derivatives risk statement, when is that required? In fact, I'll just have a look at that just briefly for us. If I turn and have a look at over here, the SIS regs. What I've got here is just something quickly for you to have a look at. A trustee may give a charge over in relation to an asset of the fund if the charge is given in relation to a derivative to which either the following is a party, the trustee or another person. And the charge complies with sub-relation 1A, B and C. The fund has in place a derivatives risk statement that sets out the policies for use of derivatives, including analysis of the risks associated with use of derivatives, restrictions and controls on the use of derivatives, and compliance process to ensure the controls are effective. So these are quite easy because this is generally, because it's a SMSF, it's all going to be bundled in there. Now, when we go to the definition of derivative in 1315A, it talks about anything that's a derivative, a foreign exchange contract, a forward swap or option. So most of us would understand that would also include, for example, an instalment warrant, which would fit in there. Potentially an LRBA is an instalment warrant, but for shares, yes. Property, I essentially wouldn't worry about in that particular instance. So that's the SIS regs. If we then go down to insurances, where are they and how are they included? So it's a requirement. If I go back into the SIS regs, I won't do it because I don't want to run out of time, but essentially we have to include insurances. I want to show how we do that. Borrowing strategy, the fund. Remember, we had to look at liabilities, etc. Where's that covered? And clients in pension mode. Again, if we go back through there, we should understand, if I have a look at the SIS Act, that we have to note for cash flow requirements, and also how is the fund going to discharge its existing and prospective liabilities. So when we've got a pension, obviously there's going to be a number of cash flow requirements. Hopefully, thank you, Alana. Hopefully I'm speaking up a lot louder. What I'll do is I'll go and get another microphone and fix that up. So Michael's got a good question. With a deed of rectification, ratification, let's say for 18, 19 year, if the ATO deemed investment strategy inadequate, could you create one for 2020 and have it cover previous years that's in question? Which is essentially what we're doing there, Michael. What we're doing is we're creating one for 2020, and then we're saying, hold on, this is really for all the prior years. And that's also really important. If you don't believe, I mean, you remember we've got a situation that the tax office has basically come out and said, if you've just simply got 0 to 100% asset classes, that's not an investment strategy. Then what we can do is we can build one now and take it back into the past and rectify it. So we'll cover that. So we've got here, in other words, the new one will rectify the old. Again, that's a good question, Michael, and we'll have a look at that. Paul Gerard, good to see you on board. How is the strategy impacted when a fund commences to trade investments which may be more speculative, Bitcoin, currency, leverage investment? How does its obligation impact the base strategy? Can it be specific, customized? So I'm going to look at the difference between alternatives and custom, how I would do it in the system, and short positions also as well. Now, whenever we do those, short positions generally, if I'm using an option to go short, then I need to do that derivatives risk statement. So let's bounce out of here, go into, I'm going to go fresh for this. So I'm going to go into our Lightyear portal, and I'm just going to put in here investment strategy. We can either go there, or alternatively, we can go down here. Anything to do with SMSF, establish, maintain, and upgrade is there. So what I'll do is pop up all the elements here. So I've got an I've got an investment strategy for the fund. So that's where we've got a pooled investment strategy. Alternatively, you've heard me before, if I've got different generations in the fund, so mum and dad in the pension, and I've got a couple of kids in the fund, and one of those children are actually in an LRBA, then probably what I would do is I may well do an investment strategy for the fund there, and then I'd do a member-directed investment strategy. So that's down here. And what that is that would pull out, and that works with both class and also BGL. And I'm sure with what happens with super concepts, but essentially what will happen is for each member, or we can have a husband and wife in the LRBA, we can have separate investment strategies, which is quite useful for when we're doing segregated investment strategies. But more importantly, if you've heard me before, if you're doing an LRBA, if we're running a pooled investment strategy, then any LRBA, it's the total value of the asset, not the net value, which is included part of the pooled value for investment strategy purposes and T-bar purposes. So that if we've got, like mum and dad have got 1.2 million in the fund, we've got their son Michael who's in there with $100,000, but's borrowed $400,000, and hopefully you all saw that great session yesterday on SMSF lending. It's certainly I know through eMoney and I Love Accounting, it's certainly opened up the doors for LRBAs. We've got that younger generation who's got $500,000 property, only $100,000 member balance, and the $400,000 liability. We'd find that of that, with 1.2, 100, we'd find that of the $400,000 borrowing, around about $330,000 of that would be credited as a T-bar amount. So we just got to be really careful about that. But if it was all member-directed investment strategy, so the youngest one just had it, then effectively we wouldn't be caught. So hopefully you'll understand the difference of when to do a member-directed investment strategy versus a pool. A couple of things here. I've obviously got lots of leading member, change of trustees, contributions, etc. So I'm just going to go the investment strategy for the fund. You can see I'm an LY strategist, so I don't need to pay for it if you're out. Obviously, if you're not an LY strategist or a licensee, we can just do unlimited documents. You would have to pay $49. So I have to choose a folder. It's absolutely crucial. So I'll use this as my test folder. So I've already set it up. When you see this green, that means you can start. So green means go. So this is now going in. That was, again, a great session. You can get that up on YouTube if you want. So I'm looking at, this is our background system. At any point in time, you can save your answers, which, you know, if you go through, it's like any document, I prefer to save the answers. You can check your document any time through your preview. At the end, you can look at your answer summary. So these are all useful, but remember, at any point in time, once you go through here, if you just save answers, you don't finalize, when you go back into your system here, that'll actually be your in-progress docs. But if you finish, then it actually goes into your vault and you can go through the relaunch process. So to know what it is, I'm actually going to call it a name. So I'm going to put Grant's IS for January. I hope you're all going to have a great Australia Day. Now, I will be doing this part of our Abbott-Family. Again, just on that, as you can see, you know, for some of you, I know you've come from Now Infinity. View Legal and Now Infinity have obviously split up, which puts a lot of exposure there for those of you using Now Infinity documents. So just be really careful about that one. I know our team called up View Legal and they said that they're not supporting the platform. So there's been obviously a break there. So it's absolutely crucial. But one of the elements there is I own 50% of Abbott-Family. So it's the reason we did that is that I've been dudded in the past with lawyers who we've had an arrangement with, who've then walked away, and then they can leave you in big strife, as we've found with Now Infinity. And that could potentially happen with ClearDocs, who get their sign-off from Maddox. What would happen there? So, you know, from that perspective, we've got a license to provide sign-off, a perpetual license to provide sign-off to Lightyear Docs. So it's not going to happen with us. So I'm putting my logo, Michael and everyone else who are licensee or LY strategist, you'd have your own logo tag that you put in and then puts the document out with your logo. Okay, so now we're going to get stuck in. So I'm going to use the Smith Family Super Fund, so that's okay. Now, what date was the fund established? So we can put in there 0103 2018. Actually, I'll do 2013. What is the end date of the current year? As I said before, I'm doing this now because this is a forward-looking strategy. So that's 30 June 2020. Can you believe it's 2020? Now, remember our investment objective. Now, what I've said is under 52B, remember we had a look at that before. We're going through the process, the risks involved, and realise likely return for the fund's investments, having regard to its objectives. So that's investment and the fund's objectives, its mission statement. So the way I read that, the way that I've pulled that up into this document is, this is the current fund's investment objective. So if you go, do you want to customize? You go, no, then the investment objective is going to say the trustee by its investment strategy seeks to maximize the fund's members' retirement benefits, including income streams and lump sums, as well as maximising any death benefits if the member's superannuation benefits are not being used. In essence, this, if we have a look at it, looks like what section? Does anyone know what section does that look like, do you think? Let me just take you. The reason we write it like that is I'm trying to cover two birds with one stone, because I like doing those sort of things. So if I go back and I have a look here, we should have, we're coming up to it, 58A. Can't believe the size of the legislation this day is crazy. Okay, here we come to 62. The sole purpose test. Each trust and regulated super fund must ensure the funds maintained solely for one or more of the following purposes: the provision for benefits for each member of the fund on or after the member's retirement, or the provision of benefits in respect of each member of the fund on or after the member's death. So I've been quite crafty in making this investment objective to follow the sole purpose test. Now, of course, you might choose to provide your own investment objective, and essentially, because this is an open area, whatever you write in there will actually flow into the document. My preference here is, again, stick to the sole purpose test, but we do have some people who have got farms, etc., who like to write in that. So put that in there, and hats off to you, Brian Wibley. Now, again, remember, Michael, we talked about the rectification, ratification, look at that. But if your client has received a diversification letter from the Commissioner, click that button. Does that make sense? This is a brand new one. Has your client received a diversification letter? Click that one and I'll show you where it flows in. Do you want to rectify and ratify an early investment strategy? Absolutely. So do we know the date of the deed? Well, we don't know that. We can finish all of this, go back, check it at the launch, and then when the client comes in to sign, that's when we put the date of the deed and rectification. We can either do it by hand or reopen this document, print it out, etc. So please enter the ending date of the prior years of income. So let's go down the track. Michael said, well, hold on, we want 30 June 2019. That's fine. But we go back and think, oh my God, we've got a bit of a problem here. So I just press the tab button, because we've been running just stock standard, or 2018 stock standard, you know, the 100%ers for a 100% asset class over everything. And we're a bit worried that that is not an appropriate investment strategy. So I'm going to go back probably 4 years, because I think that's probably enough for us for a statute of limitation. So I go back there. So watch what happens when that comes up. Does that make sense, everyone? Is there any questions on that at all? Just let me know as we go through. So this is pretty easy. We've got our corporate trustee. So we've got Smith nominees. This is pretty interesting. We put in our ACN, so that's easy. I'm going to put in the street line address, 5 Smith Street, Sydney, New South Wales 2000. We've got 2 directors, so I'll put in 2 there. So you need to put that in just so you now get 2 slots. So we've got John Smith. Do we want him to sign the investment strategy? Again, it's going to depend on what your memo and articles. Do you need all directors to sign or just one? I prefer that everyone signs, because they're all then up and liable, remember, under 52(2)(b). So this is so far so good. Now, when's the meeting? Again, if we don't know, we can leave that blank. At what date? We just choose our select, because we've already got that date, and that'll pop up. Who's the chairman? Obviously, it's going to be John Smith. So that's okay. Now we slot in, you can see, please enter the names of all the members who are covered under the investment strategy. So we've got 2 there. I'm confirming. Now I've got their names. So the first one I've got is John Smith. Now I put John's age in years. Now, first off, I'll say John's 49. Does the member have a pension? Now, what I might do, actually, I might just switch it around. I'll put John at 62. He has a pension, but he has no insurances. He's married to Sally Smith, second wife, who is age 45, doesn't have a pension, but we do have an insurance policy over Sally. And I want to show you what that looks like in the document. Does that follow? So when you're looking at insurances, that's the relevant section there. For cash flow and pensions, remember 52B, we want to put this in because every time I touch that or put in a dot, that actually changes the investment strategy. In fact, there's almost 1 billion combinations in this investment strategy simply by adding different people, clicking different dots. So let's go down to the cash strategy. So what is the domestic cash benchmark allocation? So we need to have it between certain percentages. So invested via bank accounts, bank bills, similar securities. So let's go that we've got 10% we're going to carry cash. What I'll do is I'll do one for a 90%er because we said that this person's received a letter from the tax office. So I'm going to go 90 to 30 because I know from that perspective that, look, we might receive a lot of cash through the year because of contributions, etc., and a lot of rent. So I'm going to keep the cash flow up. I put 30, might be a bit over the top. I could probably go, 20. But, just give yourself a bit of leeway in case you want to make a big NCC. Go in where it says in here, don't leave it blank or not applicable. You can either do NA or 0. So I haven't got any fixed interest. So government bonds, local bonds, I certainly wouldn't put, look, you could put, remember those related party loans? We could put them in here, but I think I'd prefer them down in a custom asset. But we could easily put them in as a domestic fixed interest if we wanted to in there. So I'll put NA in there just so you can see the difference. 0, we haven't got any international fixed interest. Equities, let's put in a bit of diversification there, a bit of fun, eh? So we're going to have between 5 to 15%. And that's mainly that we get extra cash. We've got our property. Once our property is in that positive cash flow, then we're going to do something with it. We can keep it in cash or we can put it in equities. We haven't got any international equities. Now, here we go with the property. So I've got between 70, depending on my vowels, and 90%. So I'm currently running 90%. Now, does the fund invest more of 50%? Look, what we're doing here is we're actually trying to beef up the analysis. So I'm going to go all residential, and I've got 70 to 90 on that one. So that follows there. What will happen is that then brings up a residential paper. Commercial, industrial, rural will come to a little bit later on. International property, 0. And each time we click these buttons, they have an impact. Now, an alternative strategy, for example, this could be, again, we could go 0, we could go 5 to 15%, and that could be, for example, and I could go 5 to 15% in, and that could be a related party. I'll just put in related party investment. In fact, I'll go here, 0 to 5. Because we obviously want to keep under our 5% rule. So this includes hedge funds, investments in private companies, you can put it in there, arts and antiques, futures, derivatives and commodities, we can also include there. So if you have a derivatives or assets, which is a charge, so you need a derivatives risk statement, as we saw before, then I'd click yes there. Now the borrowing strategy. So the loan value ratio for the whole fund is not just a specific asset. So when we have a look at the fund, what we've got is what's your borrowing benchmark allocation? What are you going to borrow? So we've got 90% of our fund, and let's say it's a $1.5 million fund, and we'll leave it a $1 million fund, 90% of it, or over $900,000, fluctuating is going to be by way of the property valuation. So if I've got a 60% LVR on a $900,000 valuation, that means I'm up around about $540,000. So of $1 million fund, $540,000, I'd probably go between 40 to 65 just in case I refinance. So it's the actual value of the whole fund, not that specific asset we put in there. Now, here's the custom asset. Would I like to put in a custom asset? Absolutely. So, for example, here I could put SMSF loan to related party. So what are the key characteristics? So in here, so you can put in here, just write in the trustee of the fund has chosen to lend to a member's business run in a company and will lend no more than 5% of the funds, of the fund's assets. Importantly, compliance documentation, including loan agreement and mortgage deed, have been prepared. Now, I might, as I go down the track, I might start to build some of these options, which are like you can actually insert these in there through buttons. So what's the trustee's time frame? Well, that's obviously going to be the length of the loan. What is the asset benchmark allocation? 0 to 5%. So again, now if I wanted to, in fact, what I have to do is, it was raised with me, some of the things that you looked at or were put to me, we might have like 4 or 5 customized assets. So the alternative's not too bad, but I prefer a lot of customized. So what I'm going to do is I'll actually put in add another button in there. So whenever you see add another, all it does is you add another custom strategy. So that will be done probably by 11 o'clock this morning or 12 o'clock this morning. So it'll simply be putting add another. So that's the end of that document. We're going to now generate it. And from that, we're then going to have a look, and I'll show you where everything is. So it's a highly customizable document, this one. And I think it's a bit of fun there as well. Again, I could have gone the document preview. Remember, this would now, if I wanted to go in here, I could go into my vault, go into grant test, and you can see there my investment strategy there. And I could relaunch it if I wanted to make a change, or I can just simply download it. I could have done that from the prior page anyway. So I get my investment strategy. You can see that's in Abbott-Family, but your logo would be up there. So first off, we've got a guidance statement, and this essentially goes through all the key issues that we've gone through, you know, 52B, you can see there 52B2F, which actually then goes through all of these as well, but gives a bit more of an idea. We look at investment objectives, investment strategies. We look at the 5 steps, you know, building portfolios, so on and so forth. And we look at insurances, which is actually taken straight from the Commissioner's guidelines around that. Trauma insurance, how it's not allowed inside the fund. And then we go straight into the trustee meeting. So I want to show you this here, which is pretty important. So this is the investment strategy. The first thing is the trustee is going to accept this. So I've got all the trustees, I've got the Smith family, etc. The trustees review the fund's proposed investment strategy. See attached, and it's considered the adoption of the investment strategy of the fund. The purpose of the investment strategy is to maximise the fund's members' retirement benefits, including income streams. So again, that's all the sole purpose test. Now, this is the insert. So if I go back here, and what I'm going to do is relaunch, just so you get a bit of an idea here. So it just shows you how quickly I can go back and relaunch. This pops up because I've clicked yes. If I've gone no, then this one paragraph won't come up. So the trustee of the fund has received a letter from the Commissioner of Taxation in relation to the fund's investment diversification, and hereby affirms that the trustee is comfortable, bearing in mind the fund's, oops, I've got to change that. So as I said, I only just put it in this morning, cash flows and retirement needs of members that at this stage are holding property in excess of 80% is suitable. So they're putting their mind to it. They then resolve to cease the fund's investment strategy, if any, adopt the current investment strategy, just to keep on file the adopted investment strategy on file for the benefit, and again, to affirm that the current investment strategy is suitable for the needs of the fund and its members, notwithstanding as being identified by the Commission of Taxation as potentially lacking diversification in its investments. Again, I'll go through and we'll change this very shortly. But again, signed off by John Smith and also Sally Smith as director. Now, before we get into the investment strategy, this is our deed of rectification ratification that we talked about. So this would be, because I have ticked this here, do you want to rectify and ratify? Remember, I put all that stuff in. Let's go and see how it plays out. Now, if I went to any legal firm to do this, it'd cost at least, if you're doing a customised thing like this, one is they would want to provide advice around it, $2,500, plus the document itself. So you're looking around about $3,000. But because we're automating this system, we've got an ability now through that automation, even though this is only a $49 document, to add all of this in there as well. Hint for you, when you go through here and you put here, I'm going to have to go back and change it. We don't need to these. So again, I'll just change it shortly. So we've got the Smith Family Super Fund. John Smith, Sally Smith is the current trustee director member of the fund. Trustee has previously created investment strategy under Regulation 4.09 for these years, these income years. An updated and rectified investment strategy as prepared by the trustees attached, and the trustees wish to rectify. So they're rectifying, they're saying for all these years, we're going to use the investment strategy attached. We're also ratifying. So there's two things. Rectifying means you're fixing up. It's a deed of mistake, but we're also ratifying that this is now to be taken for the prior years, and this doesn't result in a resettlement at law. Now we go down the investment strategy per se. So the investment objective, remember we had that. I could have put a customisable in there, but that's not the case. So I'm just going to show you through. So we've got the members' names. John, age 62, pension, no. So investment strategy, again, you know, we've seen this enough. This is just a restatement of 52B to F. Asset allocation, we go in there and we're talking about benchmarking. The issue of risk, as a key part of the process of constructing investment strategy, trustee is required by law to consider the risk. All investments entail different levels and types of risk. If need be, the trustee may engage the service of investment portfolio specialist, then the trustee portfolio specialist can work. So the issue of risk essentially is taken into account. The risk of inadequate diversification, which follows on from 52B to F, we've covered. Remember, we covered it up here not in the deed of rectification. Remember, we covered it in the trustee meeting. So we essentially covered that there. When we go down here, borrowing. So we've got a borrowing in there. As the trustee decided to borrow with borrowings relevant to the specific borrowing assets of 40-65%. Might actually just tidy up that wording. But essentially, remember that was our LVR for the position. Diversification to mitigate risk. Diversification is best seen by the spread of the fund's portfolio. At the other end, where a fund applies, we've got 90-100%. There is an inherent risk that the property drops in value, cannot be tenanted, is impacted by a natural or man-made disaster. More importantly, if one member dies, a fire sale. So there's a risk there. So we've actually had a look at that. But remember, we've gone heavy on the diversification risk, and we've covered that in the actual trustee minutes, which is a customisable virtual. Importantly, the trustee understands investment markets move up and down. The trustee of the fund has decided to invest in residential property as a long-term hold, 10 plus years, and all the asset allocation is significant. Now, this pops up if you click that 50% or more button. So if I go down here and I click 50% or more, then this extra paragraph comes in and also brings into account a 2015 long-term property trends. I am going to go through and look at updating that. For commercial property, we've got a couple of other ones here that I'll link through. We've got the Frank Knight Commercial Property and Industrial Property Outlook Report. And I think I had a Deloitte's, which one have I got here? So that's the Knight Frank report, and I've also got a Deloitte's one there as well. So when you click, if I go back here, if I click commercial, although we haven't included that today, I'll be working on that. I'll be doing my allocation. There will be links to these reports as well. So they will follow into our relevant investment strategy. So watch out for that one as well. So if we've got this will be for residential. We'll then have, if you click commercial or industrial, there'll be one there. And rural will also be another one. I'll have to get some rural property stuff off my mate, Brian Wibley. Cash requirements, a trustee is assessed and monitored. That's normally the case, but because we've picked pension, this comes up. So the trustee fund is liable for the payment of pensions as requested by pension members, as noted. The investments held by the trustee for pension members have been specifically acquired and maintained to meet the cash needs of the trustee of the fund in terms of pension members. So I'm meeting my cash flow requirements for pensions, and that's simply because in this process, I've gone through and have a look at the members. I've ticked, does the member have a pension? If I didn't tick that, then the cash flow just is limited to that. Balancing risk and return, that's pretty stock standard. Now I go into my benchmarks, 10 to 30%. Again, you can see here the key characteristics. If I do non-NA, so that's okay. I prefer to do zero, because when you do zero, it's all included in there. I've got my domestic equities. Remember, I put all that in there. I've got my domestic property basically sitting in there, and of that residential 70 to 90%, and I could have changed that. Alternatives, I've gone that related party investment as well. Borrowing, this is where that fits in. And then I've got my customizable. See that one there? I like that one. So I am going to go through, as I said before, and I'll add another. So the more you can put in there, the more customizable, the better it is. So we need to put in what it is, put in our comments there, our duration and what it is there. Now, in this one here, going back to the members, we've got insurance for Sally. So what happens there, we've got the fund has considered the requirements of its members in terms of insurance, as noted that adequate life and potential TB have been put in place for the following members of the fund, Sally. So obviously, where there is no member, then a different sentence comes up that we've considered and don't need insurances. So again, that's a case. If you wanted to, if you've got the policy, you could attach that as an addendum, but that's essentially up to you. So that's where insurances flow in. Insurance strategy review and monitoring, options or derivatives. So the trustee fund has entered into derivatives contracts such as blah, 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 and then it's gone through this process. In that regard, the trustee of the fund hereby notes the trustee has reviewed and determined, in some cases, professionalised the risks and, more important, limitations on who in the fund's governing trusteeship may undertake any derivatives contract. So that's essentially our investment strategy, and then we go on to our research papers, which, as I said, will beef up for commercial and also industrial if you have that in there. So I think that that's pretty crucial if you want to go in there. Yeah, I saw that one, Edmund. Thank you for that. Section Reserve Bank. I put that in. I will go back. I did notice that. So you guys are way in front of me. Just a couple other things before I finish. If I go back to the Lightyear Docs site, see our support centre here. There's two things which I would strongly advise you: strategy, advice, info, and toolkits. So I press on there, and then you'll see here we've got client letters. We've got the investment strategy review and recommendation letter, which we can, again, this is a straight doc, so you can change it as you see fit. I'll open that one up. And what I probably would suggest, and I might in fact add both, but we've got a sample letter there for you to use, a bit of background. So going through, talking to your clients, all of them, because I mean, this is only just the start. Going through the Commissioner's letter, which we saw there, and then talking about investment strategies. So important investment strategy, forward-looking document, and the trustee must have one in place. Sorry, I just went through enable the editing. I would put in here, have one in place for the income year ending 30 June. So it just shows you how easy it is to do, and income years. So we can go through, put it in there. We'll talk about the fines. You put your fee in there, and if they don't want you to go, if they don't want to help you to prepare it, then effectively you want to get an indemnity there from them, because you don't want to get caught. Remember, in 54C and 55.3, you don't want to get caught preparing this for a client and get basically pinged. If they're simply to ratify this for the client, you've taken their instructions and gone through. Another good one that I like in terms of the tools that we've got here, if I go back to the client letter and recommendations, you'll see there is the trustee questionnaire, which goes through the same process. It's a download, it's a straight doc. In fact, you might want to put this together with this prior letter as well. And essentially goes through this, you can give this straight to the client. The Commissioner of Taxation released a letter, what you need to do. It talks about, please complete the following table. The purpose of this table is to develop your fund's investment strategy as required under the super laws. There are a number of asset types, and the table you need to do is put in a benchmark allocation. It's not a specific number, but a range you plan on implementing. So for example, there's another typo there. I can't believe that. I'll go through and change that. It's not, remember, there is no right or wrong, simply what you expect to invest in over the next year. And then from this, we can prepare a comprehensive investment strategy. So you get through and they'll complete all of that for you, fax it back, and then you're basically off and running. Customizable assets basically aren't sitting there. So when you have a look at all that, essentially what that does, that covers all the questions we've got there. Feel free for that to essentially come back to us at any point in time and ask us questions, particularly just on our support line. Just a couple of things. It's only $49. I've got a couple of little tweaks there, which I'll do immediately after that. That's the power of this package. What we'll be doing is launching next week our SMSF establishment. So you're able to do corporate trustee, an SMSFD, and that could be a leading member or normally, and then automatically an investment strategy will come in. You won't necessarily have to do it at that time, but you will be able to do it at that time. Likewise, if you're doing an LRBA, an investment strategy is obviously a requirement, so we'll do that whether it's a related party or it's a lending one. Again, the automation is fantastic. It just saves a lot of time. Go and have a look at that SMSF lending update that we did. That was a great session. You can find that on YouTube if you just go under SMSF TV. So I think if I've got here, I've got YouTube under here. So if I go, just go SMSF TV. Okay, so you've got quite a lot there. It should be up. I'll have to, as you can see, there's hundreds of videos that we've got there. It might be down the bottom because we haven't really looked at it. Okay, investment strategies. Okay, so I'll have a look at where we go, because obviously it's only just gone up, so it wouldn't be right up the top there at this stage. Another things that we want to have a look at is make sure you're getting your full component. We've had a couple of questions from people recently. They're saying, look, we're really short on a whole lot of ethics, because you need to have 5 hours of client care, 5 hours of corporate regulatory, and 9 hours of ethics, plus technical, plus a whole lot of other stuff. So we will be building in this. So if you're just looking for CPD from us, if you're on our strategist, you're going to get plenty of CPD hours. Importantly, if you do have time, come along to our 2-day event, which is going to be on succession and estate planning. We've got 20 people, or in fact 23. We're only taking 35. It's only $595. You can access that if you want to go along to that one. That should be on, I think, I Love SMSF. I love sausage rolls, don't we all? If we go and have a look at I Love SMSF Home, and you can go and buy tickets there. If you're already a LY strategist or licensee, use $545. Otherwise, it's $595. So make sure you come along to that. Just a couple of questions. Okay, we've got Reserve Bank. Hi Grant, just from Ben, just wondering whether any accountant can pre-fill the investment strategy based on historical data of the client in order for them to review, edit and sign. As far as I've heard, it's a no, mainly because historical data is not an investment strategy. An investment strategy is a forward-looking document. Now, the way I would handle that, get the client to complete the questionnaire, and then from that questionnaire, what I would be doing is effectively going and doing your deed of ratifications from prior years. Now, just as an aside, I am going to make, as I said, a couple of changes in investment strategy, and that'll be out by the time we go through this. And my good friend Sally Rourke, who I know is listening in, she's also gone through and given me a whole lot of things to upgrade and update. So there will be a new released investment strategy, but what we've got there is extremely robust and certainly like nothing else in the marketplace. Anyway, thank you very much for attending this session. Again, it's next week. I will probably be releasing, let me see, I might even get up to the protector, which is something very special. So just make sure that you each week that on the home page that you sign in for our next webinar. So the next webinar, just so you can keep yourself up to date, because we are releasing documents each and every week. Anyway, that's enough from me. Thank you for attending. 2020 is going to be an absolutely big one for all of us. And it's also going to be extremely exciting for us. So that's enough from me, and I'll sign out there.